Hi, this is Randy Finney with Right Side of the Chart, and this is a mid-session update for Thursday, November 5th, 2020. What we'll do here is a very quick update on the markets. I posted some charts this morning. I'll follow up on that. We'll do an update on gold, coffee, natural gas, a lot of things I've been highlighting recently, and the energy sector too, which I've just started recently highlighting as one of the better-looking sectors, I think, in the S&P 500 as a setup, not don't mistake a bullish setup for a bullish trending sector. For example, technology. Tech's going up right now, XLK. Um, Whereas XLE in the energy sector, they're in a downtrend, but set up bullishly, in other words, for a potential trend reversal. So we'll get to that here in just a second. Let's start out with the equity markets, and we'll start with NQ. I'm going to zoom in a little tighter before I do, just a kind of a quick recap. This is a 60-minute chart, great for swing trading. I like to sniff out these, divergent lows, divergent highs. Even here, you can see all these lines right here. There's a divergence line correction, little wedges. See these small wedges? Correction, put in a big divergent low. See, typically the bigger the divergence, you can see down below these divergence lines, the bigger the rally. Once we put in this big divergent low, which actually goes to the left of the chart, you had this big rally that ultimately, before all is said and done, was that. Within there, you have these small divergences. You can see there little negative divergences and relatively smaller corrections. So again, not always, but typically the scope of the divergence will, give you a good idea of the magnitude of the correction. In this case, no, we had a relatively small divergent high, but it was a big drop, and it set up that downtrend. So just to kind of recap to what's happened most recently, this was the most significant technical event in a while. This was a well-defined downtrend that kept this downtrend intact. We had really a price channel there, a little overshoot of the channel on the bottom, put in a pretty big divergent low as pointed out. And I was harping on it back then. You really don't want to be short or go short, with these divergences in place, and hopefully that saves some folks from getting caught in this uptrend here, or allowed them to position long for the ride. So what we had, I'm going to zoom in a little bit tighter here. We had a breakout that occurred the other night after the election started. All this was covered again. Breakout right here, rally up, back test. There's your trend line, and then boom, off to the races. Today, this morning, I posted this minor trend line. I call it minor. It's a little thinner than the other one. So this is the trend line I was posting up until today. And it's still a valid trend line. It's still a pullback target that I think will be hit soon. You had a minor trend line this morning. Posted that right after that post. We went on to breakdown. It was pretty impulsive. We back tested so far, and we're still below the trend line. So that puts NQ on a sell signal. However, we did have a whipsaw on SPY. I posted the breakdown in the comments section below that post. Right after the NQ broke down, we did follow through with ES. I'm going to zoom in a little bit here. However, ES had a whipsaw. There was, at the time, a pretty impulsive breakdown right here that occurred right after that NQ breakdown. But you can see ES whip back up, and it remains above this here. I'm going to pull this line down just a hair to come in and capture. I put it on bars right here. We can flip back to candlesticks. The bars just show a little bit better on the video due to the coloration. So this is what we're watching. It's still a valid trend line by far. In fact, I just pulled it down a little bit to really say that whipsaw signal that I had earlier wasn't a whipsaw. If I come in and sharpen my pencil with this trend line and come in here, you can see it's caught all these previous reaction lows right here. So that's it. There's your negative divergence. It is a rising wedge, and that's most likely, or in my opinion, 100% why NQ hasn't gone down more impulsively since the breakdown. It's that the S&P 500 has yet to confirm. In the post this morning, I said you'd need to see them both break down, and again, I had that line a little tight. And but there it is now. So what you want to see is a solid break and 60-minute close. A candle that looks like this, but red, of course. And as I like to say, the redder the better. Or if you get a breakdown and close below the trend line, follow-up stick would certainly help. A follow-up red candle. And price targets, again, they were already laid out this morning. If and when we get that sell signal, remember we have negative divergence here on both indicators on ES, and there's a minimum target there is about 34.60. 34.60.50 or so. We take that out, we come on, hit the trend line there. So we have these two trend lines both on ES and NQ, and NQ has quite a bit more to fall. Now NQ also went up more. I think the rally on NQ top to bottom was here. Let me measure it out on QQQ and SPY. QQQ, we had a rally from on that divergent low. So far, we've rallied about 10.5%. And on SPY, I think we're at about a 9% rally, which makes sense. I always say you tend to get more bang for your buck trading NQ because it's chock full of tech stocks, high growth stocks. You know, you're going to have utilities and REITs and steady eddy dividend paying stocks that are going to drag or hold the S&P 500 back on a rally, and they also tend to buoy it during corrections. They tend to fall less, those type of companies. So you know, if you're trading, you can trade SPY, or I like to trade NQ because you just basically have more juice. It tends to go up, you know, SPY goes up X, the or NASDAQ 100 tends to go up X plus whatever. And of course, vice versa on the pullbacks. Therefore, you know, a little more pullback potential in on NQ. Now I'm going to move this trend line. I don't know if this drifted or what, but this is where this trend line should be. I think that's where I had it before. If not, that's where it needs to be. There's an uptrend line on the SPY 60-minute chart. And as I mentioned this morning, if you don't trade futures, I like to watch them. They're going to give us more clues, a lot more reaction points because they trade around the clock. But here's our gap right here, a big old gap. And gaps are often, not always, but often backfilled. And so that would be a logical pullback target for SPY traders. The bottom of that gap's around 342.52. QQQ, the uptrend line's not nearly as well defined. In fact, I don't even want to force a trend line here. There's not a lot of reaction points to draw it on. But what we do also have is a big old gap right here. You know, we gapped up. There's where we closed yesterday. So there's our gap right there, and that would be a pullback target about 286.74. And I need to continue to reiterate, we're still in the post-election noise. You know, the election hasn't even been called officially yet. And even when it does, you've got you know, the Republicans contesting, you know, a lot of the votes. So bottom line is the noise, the dust hasn't settled yet. And if you're not an active trader, you can hold back. But I also mentioned the other day, this breakout above the downtrend line on QQQ wasn't just a something for active traders. It was a buy signal for swing traders. That was a big breakout, and certainly did determine the next near-term trend. I mean, since the breakout alone, you know, forget about the rally off the bottom. Just since the breakout of the trend line in a few days, we've rallied 6.5%. So again, that was a significant breakout. And again, the futures gave you the heads up. You see, if you trade QQQ, you had to chase a gap of you know, about 2.5% up. Whereas if you are, you know, trading futures, and it occurred, you know, during evening hours when you were still awake, 9 o'clock, the breakout right there. The back test came a little later that night, obviously, but those were your two objective entries there. And so that's where we're at on the futures. Let's not talk much more about it. Again, I'll continue to turn to the weekly charts once, or daily and weekly charts once the noise and dust settles here. Okay, on to the next one. Gold. Gold broke out in the video on Tuesday. I highlighted, let me find gold for you. I've got a ton of charts going down here. Here it is, GC. So here's the trend line I highlighted on Tuesday, saying that would be our next buy signal on gold. We got it. There's our breakout. Pretty impulsive. We did rally into that. We've hit now that first resistance. You can see I have it at I had it at 1947.80. We're at 1947.30. Brief Momo overshoot. So again, that's the bulk of the initial run was there. And as I said in the post earlier today, my preference would be a pullback off this level or consolidation, and then your next buy signal will come on a solid break above. Again, it would help to alleviate some of these near-term overbought conditions to get a reaction off that level. And bigger picture too, and I'm going to loop to that in a second, is that Euro-US dollar pair still at resistance. It's pushing. It can pop any day now. It's been over 2 months. Or is it over 3 months now that we've been testing that trend line, that long-term downtrend line on Euro-US dollar. So here, okay, let me flip over that, and then I'll flip back to gold. So when we look at that, that's a big one for me. That helped, call the top in gold recently when the euro US dollar pair hit that long term. Again, it's a very, very significant long term downtrend line, and there's a high correlation between the euro and gold and the dollar and gold. And so that's it. So we hit it there, and it's been now 3.2 months, I think it is. Yep, according to this, almost 3.5 months that we've been testing that line almost on a weekly basis. Test, 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 test. We're right there. We could pop it any day. We could also get rejected. And as I like to say, resistance is resistance until unless taken out. And there's our resistance line. So what am I saying? I'm talking very near-term stuff. We have a near-term buy signal on gold today. So far, it rallied impulsively. It didn't just limp when it took out that trend line. It rallied impulsively. But if the euro is rejected here, then that's not going to be good for gold. If we can break out, print a solid, all we need is a solid weekly close. See, this is why I always talk about trading, being cognizant of the time frame you're trading off of. On a weekly chart, all that matters is how a weekly candle closes. These are intra-week dips or breaks above there, only to see the euro US dollar pair fall right back below and close. So the body, the fat part, shows where we close, and you can see the skinny part, or they call it the shadow, is where we traded intra-week. And so that's why you want to see a end of week close, solid close, not just right here. You want to see it pretty well above that level, and that's going to be a breakout, and that should be net bullish for gold. So that's long-term stuff. And again, the 120-minute chart that I'm covering here, this is more near-term stuff. And certainly a trade to be made today on the breakout. And if we take out 190, we'll call it 1950, take it out with conviction. These are your next targets on gold. And by the way, it is certainly, most certainly possible that gold can rally without the euro or the dollar falling or the euro rallying. But over time, the bigger trends, like I said, we can certainly trade this near term off these levels. And where would your objective buy points be? Well, again, a solid break above there, or a pullback to back test the trend line. Those will both be objective entries for the next swing up to the next target, or that 2020 50-ish target. Here's a 60-minute chart of silver. Silver's been a mess. As I told you, gold and silver both been grinding around. Gold had that better, well-defined downtrend line I covered in Tuesday's video and just showed you now, whereas silver has just been all over the place. But ultimately, silver tends to follow gold. So, of course, we're having a nice rally in silver today. Silver futures up about a little better than 5% right now. Obviously, again, rallying in sympathy with gold. And of course, there's the dollar plummeting. That's the catalyst for the move in gold. We had an uptrend line right here in DX, US dollar futures, broke down. And so just be very, very aware. This is not mere coincidence. The dollar plunged like this at the same time when gold broke out. So gold broke out above its downtrend line right about when the dollar broke down. Dollar had an impulsive drop. Gold broke out at the same time and had an impulsive rally because, again, the inverse correlation. It's very simple. Gold's priced in US dollars. So if the dollar drops in value, it takes more dollars to buy an ounce of gold. If the dollar rallies and is strong, it's going to take fewer dollars to buy an ounce of gold. So that's why you have that correlation. And again, please don't get caught up in the day-to-day. Sometimes you'll see both the dollar and gold drop, and sometimes you can see that even last for months. But again, when you zoom back, and if you haven't done this, I've done it many times on this site, showed you videos going back decades, and you can see the relationship between the dollar and gold over the longer term period of time. It's pretty unmistakable. And a couple other things I've been highlighting, watching lately. We still need that real spark in coffee. It's been building divergence for a while, quite some time here. Positive bullish divergence right there. And I think it was last week or earlier this week, I added this downtrend line, which gives us this little wedge pattern. We're starting to pop above it here. Nothing impulsive yet, but if we can build on these gains right here, this breakout, that should take us up here to that 108.60-ish resistance level, and a break above that should open the door up to this next target, or possibly these targets up here. And for those that prefer ETFs, JO is your go-to, almost your only option, to my knowledge, for coffee. There's an uptrend line, slightly breached, but we kept these divergences intact all along. And there's that comparable downtrend line I just showed you on coffee futures. There's your big divergence here on the 60-minute chart. Breakout right there above the trend line so far today. Some resistance up here about 32.30. Boom, and if that can go, that should open the door to move up to about 34, if not more on coffee, but that would be your first target. Again, if we can get a little more upside, build on this breakout, and take out that horizontal resistance. It's not a super solid resistance level, but it is a line I've had there, and I'm going to leave it there and say that that needs to get taken out to open the door to there to about 34. Again, minimum target 34. And here's a nat gas. UNG is the ETF, but as I said, you're going to get a lot better read on natural gas. Even if you can't trade futures, you can get free futures charts on investing.com or your broker. I think TD Ameritrade, for one, gives you futures charts, real-time streaming. And here's the NG. This is the natural gas futures. And again, this is just more of an update. We had this uptrend line that I was highlighting for a while, saying a break above that. Below that would be bearish. We put in a divergent high. We had this rally going here. Nice rally after that bullish falling wedge breakout. And it was a good run in nat gas. And like all good things, comes to an end. And it came to an end when we broke both the trend line, the uptrend line, and that 195 support. Now where we're at, why am I doing an update? No changes. It's still bearish technical posture, but with that being said, I think I can tell you we've met the wedge measured target. The measured target or measured move for a rising wedge pattern or falling wedge pattern is the widest part of the wedge added to where it breaks down. So we're close to that there. And so what I can see, we also have some potential, again, early on, not confirmed, but potential divergence forming. In other words, any more downside in nat gas. If it gets down here, that was a former target and former resistance level, and now support. And that's about 2.9 or so on nat gas. So if we drop down here, it's going to look like this. We have the potential to put in positive divergence if we fall to that level and that support level holds and we reverse, and that could be the catalyst for the next leg up in nat gas. We're coming up on that seasonality thing, end of the year. We're in November now. Sooner or later the cold fronts start coming in, and natural gas prices, I've done charts in the past that show you they tend to rally either late in the year or early in the beginning of the new year. It's a whole seasonality thing. So this could be a corrective wave, and I'm viewing it that way right now, a corrective wave in a larger uptrend that started right here. So there's what to watch for on that gas. If we get down there, may give us a next objective long entry and a setup for the next swing up. And finally, I've started highlighting energy as one of the more, remember there's 11 sectors in the S&P 500. This is one of them. And although it is in a downtrend, it's not on fire right now like tech stocks and things like that. It is setting up for a nice trend reversal. So they're beat down. These are dividend paying stocks. And the elections are now over. It's by most accounts it's going to go to Biden, but we have there's going to be a balance of power here, and that's why the markets are rallying. Republicans keeping control of Senate, so that's probably going to eliminate the odds of a big tax hike. It's going to put handcuffs on Biden, to be able to get a lot of things done that he might have normally done had they taken control of the Senate. So therefore, the market's okay with that, and so we might see. That may hamper his plans, a lot of the green energy plans that he had. It may help big oil. Whether or not it is, look, I'm not an expert in politics. I'm going to just tell you that right now. My thing is charts, and I'm looking at a nice positive divergences forming on a sector that looks poised for at least a counter trend rally. Remember, it's going to be a bear market rally. The energy sector, make no mistakes about it, has been in a bear market for many years. It topped back in 2014. This is a bear market by every account. You know, if you topped in 2014 and just recently the March lows were down 78%, we're still down 74% off that high right there. But the thing about that is I love trading bear market rallies because they're pretty impulsive and pretty powerful. You get a mix of both natural buyers coming in as well as the shorts that tend to cover, and so you can make pretty good money in short order. And an XLE, like I said, right now, minimum target I think is up there about $34. That'd be about a 15% rally. I think you get a little more juice on XOP. I really like this one as well. XOP, same thing. You need a solid breakout above this downtrend line, solid break and close, and if we get it, minimum first target there is about, keep moving that trend line, guys. All right, first target there is about 47.50, about 12% or so. Second target's up here about 56, and that'd be about a 32% run. And there's some individual stocks that should do quite a bit more than that within the energy sector. All right, that's it. I'm just going to loop back here and tell you that since I covered the indexes in the beginning, now ES has broken down. It's a pretty impulsive red candle. Hey, is a stick save likely? Meaning, do we snap back up there? Anything's possible, but as of now, there's your breakdown and sell signal, and you can see NQ also. Let me clear that out. NQ also starting to move lower again. Okay, we're going to wrap it up here. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.